And I want you to listen. If you break my rules, you will be punished. I am the boss on the field and on the dance floor. After review, number 10, Paraguay, cover his mouth. Decision is red card. Decision is red card.
I'm from the mic.
Decision is red card.
Hello, everybody. Hope you had a good week. Happy America Day weekend as we go into the fourth. Markets are closed today, but I decided to do a real quick live stream update. I want to get back to basics. I think I've been talking about a single topic for a little bit too much over these last couple of weeks. And I had a friend that contacted me about, like what is a good opportunity? What is a good opportunity to buy, to invest in, or to even trade stocks? And so I've had some friends that have come to me now. I have a point about that, people being interested in getting in stocks. But just the topic today, I'll touch on Bitcoin and all the affiliate memes going on as well. But I want to just look at a couple of recent examples of one of the most simple and useful technical analysis tools that I use, which is 50% retracements, and how they manifested in companies that are not YOLOs. They're not going out of business. There's good companies that are probably going to be around for about 10 years or more. And so that's what the topic's going to be today. Let me get things set up real quick with chat and things like that. So if you guys have things to look at, to do, just pop them in the chat real quick. Like I said, I've got an America celebration party to plan for this weekend, and so we're just going to be here for a few minutes. I'm going to give a real quick instructional, and going into the future, I think I'm going to get back to these basics too, because we are getting now into the second half of the year. We're getting to the second half of 2026, already halfway done. And yeah, I don't even complain about the passage of time anymore because it's one of the most observable phenomenons in the universe. But let's talk about May. You guys remember the little saying, sell in May and go away? Well, it doesn't mean that you sell everything, even though that's what it says. It more just means that the May is sort of the time when the gains and the trends kind of slow down. There's something about the summer months where they kind of go into a malaise. Like day trading becomes so much harder because there's just not that much volatility. And this happens every year. So I tend to take my foot, I don't hit the brake, but I take my foot off the gas when it comes to summer months. However, when I've studied independently the cycles, the probable times for inflection, for rallies to begin, it used to be, people might say, sell in May, come back Labor Day. But what I actually found was more closely the actual day, and this was the saying that I came up with, was sell in May, come back America Day. So that would be the 4th of July, essentially. So real quick, I did this research for a newsletter I published almost a decade ago when I first got into trading professionally. But real quick, I had Grok do my homework for me, and to look at the last 50 years, of course, it agreed with me, not just because AI agrees with me, but July is one of the strongest months historically. Average returns are often plus 1.5% to 2.5% in recent decades. August is weak. September is consistently the weakest month. And then October, it has a little bit of the superstitious, bad history, the great crashes. Some of the great crashes have happened in October. And so out of all the months of summer, July tends to be the most bullish one. Now, that means that probably you're getting the benefit of it also has to do with the first of the quarter. Like the first 2 quarters of the year are over, and now we're just starting into the third quarter. So that's also helpful to the statistics. But yeah, I've noticed over the years, right after July 4th weekend tends to be very bullish. And so some of the stuff you need to be positioned in already, and some of the stuff You need to be looking for opportunities up. There's two opportunities I want to highlight that have just happened recently. In other words, I don't put my foot on the brake when it comes to buying stuff or making investments or taking on positions, but I definitely take my foot off the gas. Just not as aggressive as I might boost days, say in January or towards the end of the year. And really a great example. Again, this is hindsight, but talked about this in my Discord, by the way. You should join it, come hang out. Whenever I do something, I do that there quickly. But we talked about this in the past couple of live streams as well. The only two things that I've really bought in the last 2 months have been two companies, Palantir and Home Depot. And it's because they both fit one of the simplest examples of a technical setup that I use. Over the many years I started with Ichimoku, which still informs a lot of my Bitcoin sentiment. What did they do? They changed my colors. TradingView updated. By the way, some people asked me to talk about my opinions about TradingView, and I think we got a July 4th sale that's going on now. Hang on a second. There we go. That's better. All right, go away. Close without saving. Yeah. There you go. So you can have multiple, depending on the account package you have. They've kind of been a little bit restrictive of the free accounts to get you to pay for it, but I've used it for so many years. I use it for developing custom indicators, even though I only use really one custom indicator, my spike indicator, which we'll look at in the Home Depot example. The others that I've primarily used over the years are Ichimoku. That's where I got my start in trading, studying the ins and outs, going all the way back to the foundational principles of Ichimoku. What I can tell you from all those years of study is the simplest component of Ichimoku, which is 50% retracements, are what inform much of what I do. Looking for 50% retracements. Sometimes people want to look for opportunity in stocks that are just not doing well. I mean, let's just beat on what should we call it? GME, for instance. So GME was, of course, a big meme of yesteryear, which has now just basically pretty much done nothing. Okay. A friend of mine also, not to pick on him or not, but he also brought up the example of what I thought about. Let's see, what was it? Hertz. Okay, so that was another kind of meme of yesteryear as well. I don't like stocks that look like this, and I don't like stocks that have a negative message. Now, granted, you can have a lot of good opportunity in these kind of stocks, sure, but it's going to be like a lottery ticket. What I want to see, what I want to take a position in, is a company that proceeded to suck and is likely to not suck going into the future. Not that I'm looking for something that's going to do this. Anytime I see a company that does this, I always assume that I have missed it and I'm not particularly interested in it. What I do like, and I pretty much only relegate myself to the universe of the S&P 500. The blue chips, the boomer stocks, I find plenty of opportunity in them. And one of the most recent ones was Palantir. Now that is a little bit memey of a name, but throughout, I've owned Palantir before. I bought it in the single digits. Now that sounds great when you look at it being at what it is now, but I bought it at $9 and I saw it go all the way down to $6. But I carried it through up until probably about the beginning of this year, closed, took some profit on it, and then once again re-entered because it finally pulled back to the big, giant 50% retracement of its big bull run. There's a lot of things I like about this. I want to use as an example here. And it just hit it, not this week, but last week on Thursday, June the 26th. Very, very simple. What I'll look for is a big trend. How do I define that? Well, the all-time high is going to be very easy to define, but I usually want to start where the trend began in earnest. And that's really, you can see, started back in May of 2023. This is on a weekly, by the way. And so if you look, that 50% retracement so often becomes a fantastic level because you're getting a nice discount on a stock that has been doing quite well. And this is why when you go to tech stocks and Nvidia, your Microsofts, your Facebooks, Meta, whatever, and people, you get a 10% pullback, maybe even a 20% pullback, and people start asking me, "Are you buying it?" I'm like, "No." Because I want more of a discount. I want to get it cheaper. And 50% is going to be that line in the sand where think of it this way. Did half the people buy it or did half the people sell it? You want to buy it and where half the people stay in, and that's the opportunity that you're taking. I don't know what's going to happen in the future. I've given up on trying to use technical analysis to predict. I use technical analysis for finding opportunities. And to bring in the Ichimoku component of this, what I look for a stock to stay, or any instrument for that matter, to stay bullish in a trend is, of course, if it's above the cloud, in this case on the weekly, and then the confirmation for a bearish reversal when the trend fully switches bearish is I look for the momentum, the Chikou. And when both price and the momentum get on the bearish side of the cloud, I consider the trend to be over. But if price pokes its head below the cloud a little bit, but momentum doesn't go on the other side of the cloud, I'm going to remain bullish on it, especially if it's something that has this bullish of a prior trend. And case in point, it is hitting that 50%. And a lot of the flat lines that you'll see in Ichimoku are essentially 52 period 50%, where you have a major trend like this 50% right here was formed by this trend right here, serving as a little bit of a support there. I bet if we go down to the daily, we can see that, yep, that was a sort of a fractal of what I'm talking about, where price got on the bearish side of the cloud, but momentum did not back in April of 2025. Remember back in the big tariff tantrum, price got on the bearish side of the cloud, but momentum did not. And that was also going from this earnings back in August of 24 to here, again, a 50% retracement. In other words, this is an example of the concept on the daily. And then if we step up to the next time frame of the weekly, we can see that it's doing the exact same thing, starting from the trend line back in May of 2023 up to the all-time high, which was in November of 2025. And boom, ping, beautiful hit and hold of the 50%. That was last month's buy. The other one before that in May, which was sort of informed personally. Now, Ichimoku is not always going to match up, but if we go to the monthly, it will. There you go. Just depends on the time frame. But Home Depot presented an even better situation because I had a confluence. I had a combination of not only the 50% retracement from basically the COVID low, which still remains valid all these years later for defining major lows in stocks, all the way up to its all-time high. In fact, it did that more than once. It had a COVID low to 50% retracement when it had the all-time high in 2021, held it here all through the bear market of 2022 to rise up, make a new brief all-time high, and now once again pull back to that same support. It also, if you notice, the histogram here, that is a volume profile, which I'll talk about. I talk about all the time. We can spend some more time on it in a later live stream. But this, let's include the whole of it. This represents where are most of the traders sitting? Where are most of the positions? Where's the most of the trading happen based upon volume? And you can see that during this era here, and then this era of creating support here, you create a very large, in fact, the red line representing the point of control, the most traded level, which is right around 288, let's call it 290. And then back in May, you had an earnings morning, a 9:30 a.m. spike bar, an indicator that I wrote in TradingView, not that fancy, just tells me when price goes down and closes back inside the Ichimoku Tenkan-sen. That's the teal line here. Basically just tells me, hey, there's a point of potential reversal based upon a quick moment of volatility. So all those things came together, 50% volume profile, 30-minute spike in the morning on earnings as a footnote, which just makes it even more high probability there for Home Depot. And so again, both of those plays, both of those entries were in companies that aren't going anywhere. Like I said, I had a little personal reason for getting at Home Depot. I just bought a new house and I'd been going back and forth there, spending thousands of dollars. Not to say that that's going to make the stock do well, but the 50% did. And knowing that there's a lot of people that still go to Home Depot, I'm not sure exactly what that means. The housing market, blah, 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 everything doesn't matter. Hit a level. It came off of a major bullish trend, multi-year trend to that level. It held that level. Now, if it hadn't, I have no problem getting out of the position. That's why it makes for a great decider of if I want to get in something. If it breaks below it, it enters into so by the way, if you have any questions, make sure that you ask in the chat, because I am making this a little bit of a tutorial. Like I said, this is going to be a little bit, probably we're going to keep this to a little over 30 minutes. Usually I go for an hour, but we're going to get your things in the chat here. This is going to be instructional again, because I got to get back to getting my house ready for celebrating America Day. But this simple thing to look for on a weekly, even a monthly, the trade of the century, as I called it and still call it to this day, was of course Amazon. And why I called the trade of the century was because this was a 50% retracement that started all the way back in the bottom of the .com blow up, which was 2001. This is on a monthly chart. We can go to a 3-month if we want. We can go to a quarterly chart to do it. And it pulled back, didn't hold it perfectly, but in the longer term, a 50% retracement, a 50% haircut, a 50% sale on Amazon. Now, in 2023, just as 2026, it's pretty clear Amazon is a company that's going to be around for a long time. I would rather have something like that than take a YOLO bet on some stock that some company that is kind of has dubious future. That's why the price is so low, because the future is dubious. And the market could be wrong, but you're going, even in companies that are good, legitimately good and going to be good, you're going to find those rare but very useful opportunities when they pull back to a 50% level. You just have to wait and be patient and look for them. And it happens all the time to just about every stock for that matter. I mean, even another one of my favorites that I've had for many, many years, Eli Lilly, has done a few little intermediate 50%. It did one in April, from this low from August 2025 up to January of 2026, pulled back in April for a beautiful 50% retracement, a little shorter term. Well, it's still a long-term trend, but still a shorter term trend, 50% retracement. And again, I'm using selection bias to show you the ones that worked. But one of the quintessential examples I go back to show you ones where it doesn't work was Zillow. And Zillow is a cautionary tale about when you have a big 50% retracement. I've already got it annotated from using it many times before. Price will come to it, hold it, respect it. But then once it breaks below the 50%, in other words, if half the people that were in it are now getting out of it, you have an opportunity to say, okay, this was my line in the sand. This was the level I was going to take. If it held it, I'm going to hold on to it, play for that high and beyond. If it breaks it, what's up, David? If it breaks it, then I know when to get out. It's just that simple. And it keeps me from being a back holder. And that's how you make sure that you preserve capital so that you can have money when the next 50% comes about. And that's how, after all these years, that's what I basically distilled it down to, because it keeps me honest. It keeps me from bag holding something. Once it breaks that 50%, you got to get out, because, so many people destroy so much capital by holding on and hoping for something to come back for them. And there's probably still people holding on to Zillow 5 years later because they didn't get out here. This is, by the way, another thing I call this is the valley of risk, where you could have bought anything else in these years and made your money back. That's another thing that people get in trouble with is trying to hold on to something where they've lost money or they perceptively lost money or they're down a position. They don't want to accept the loss and they hope and expect it to come back. The question has to be asked, where's my money better put? Where's my capital better put? Is it in this, which is going down just because I'm emotionally attached to it and I feel like I want to be vindicated? Or would you be better off putting it in anything else? Hell, even treasury bonds. So 50%. 50%. Well, I'll buy the dip so long as it's to a support level. I've been watching now. Sometimes I'll make a judgment call. One thing that I wanted to buy that I passed on was Rollins. This is where it came to a 50% retracement level, and this is a little subtle nuance. Can't really quantify. This just comes from years and years of experience. When it hit the level, my alert, it actually opened below it on May the 26th, and I didn't like that. I want price to let's just look at examples of good holds of 50%. I want to own more of this stock. I've owned it for years and years and years and years. This is Orkin, the pest control company, by the way. But now just was an opportunity. So this is an example of where the level was not held. Now it came down to the volume profile level, and on that day, the 28th, it sort of flirted with it. That opening that came on Friday, big gap down, I didn't want to buy it on that gap down. I want to see it respect that level. In the example of Home Depot, it touched it briefly in that moment. I didn't get in on the level exactly. I got it on at the 10 a.m. at the close of that bar. So I entered Home Depot here after I got that signal. And so sometimes when you're looking at a chart like this and you see, oh, the level I want to be is 290. If I'm entering at 300, I'm too late. But no, you're not too late. You just got confirmation that it's going to work. I want to see price run away from a level. That's what I want to see. I don't want to see it open below it. Sometimes it can be hard to avoid it if it crashes below it. But I want to see a level be respected. Then I know that it's there. And so that was it. Home Depot immediately hit it and ran away. And that's very often what you'll get in these kind of situations. From yesteryear, off the top of my head, for a quick example, it even happens in stocks like Coca-Cola. Where was that in Coca-Cola from years ago? Yes. So Coca-Cola, again, talking about COVID low defining major trends. COVID low March of 2020 to the all-time high at that moment of Coca-Cola. Again, this is sugar water. Coca-Cola. Everybody knows Coca-Cola stock. It also respects this logic where it hit the level in October of 2023, single day, runs away from that level. And that's the last time I basically bought Coca-Cola, even though I can see there's other examples of 50% happening as a trend goes along. That's what you want to see in a trend. You want to see it hold 50% levels. And some people call it Fibonacci 50%. Actually, 50% is not an actual Fibonacci number, and the Fibonacci sequence works. It's just been kind of thrown in there into indicators. 50% is just 50%. It's just when I draw mine essentially on TradingView, I do it by setting it up where I don't look at any other Fibonacci. I just take them all off. Because some people think they're great. Some people find them useful. I found simplicity to be better. And that's all I need to use, basically, is looking for those 50% retracements. And then, of course, the other example that we started off with Palantir is another example of how price hits the level, runs away from it. That's what you want to see. And so that's that little bit of nuance for when something comes to a 50%, especially with stocks, because you can tell, because they have gaps. And so you can tell, did it open at that level? Did it kiss it and run away? That's what you want to see. So that is the quick tutorial about 50% retracements that I wanted to give to people as more of an introductory thing, rather than keep harping about the topic du jour, which is, of course, and we'll touch on it now with a little market update. And that is, of course, with Bitcoin. So Bitcoin had a 50% level at 70,000. In fact, it kind of came to it, and you notice how it's hung around at this level, but not really with great respect. But now it has lost the level. it should have held here if it was going to. It should have held here, and then this little recent up move that we had back in May should have been what carried us back to the high if it was going to follow a standard trend pullback. And so now there's no denying that Bitcoin is in a bear trend and has been for quite some time. It's according to Ichimoku, it is in definitely bear space. If we go up to a monthly, you can, yeah, in the long term, you can argue that it's coming up to, it's still bullish because it's on this side of the cloud, but there's a lot of free space for it to come down to. And the most likely level that it is coming down to is going to be 42K. That is where the next potential level lies from the ETF buying that happened back in December, all the way to January 2024. That is the most likely level. That also fits the cadence of pullbacks, major bearish market pullbacks, because that represents what has to be the minimum pullback. If you give that all bearish pullbacks, well, the sequence of bearish pullbacks from all-time highs in Bitcoin have been like 95%, 85%, 75%. I'm rounding here. Like, for instance, the last one from top to bottom was 77%. Okay. Then if you account for the fact that volatility has decreased, that also being the case that the all-time high was less higher relatively, then the minimum, we're not asking for 77% pullback, but let's just call it a 66% pullback. Again, 95, 85, 77, let's call it 75. If it's just getting 10% less bad every bear cycle, that just comes to 65, and it's on track for it. It is. Another thing that I've incorporated in recent years is, of course, the 200 period SMA, and that can be a very powerful level for anything, any kind of instrument. And price on Bitcoin was supported by it for a few weeks there, but it's now closed and sits underneath it, with it now above it as resistance. And so I'm not one to call Bitcoin dead, but the bear market is not over. And you need a lot more confirmation to discount that it is over. And of course, that translates into I'm not going to spend much more time talking about this company, but it's just kind of become the topic du jour because it's been my crusade against them, because I think they're dishonest and manipulative. But MicroStrategy has done a little recovery, but it hasn't recovered very much. It's basically going to be tied to the future of Bitcoin, as well as all of its derivative products that it sells. And so there's no bullishness really coming into Bitcoin right now. Am I short Bitcoin? No, because I think it's still the risk reward on going short this far into the bear market is not that great. You have to be willing to tell people that they're wrong when everybody thinks that they're going to 1 million. Now, the upside is a little bit limited, and you could always get some kind of a bullish move up that could, or the worst thing that can happen is you could get chopped out and it could just go nowhere, just as it's kind of doing now, where it's going very, very slowly, eating theta in case you're playing with options. So 42K October, that does seem what people are thinking. It's ironic to me that a lot of the Bitcoin maxis were saying that the 4-year cycle was dead because they wanted it to be. They didn't want to believe that there was anything other than the inevitability of Bitcoin that was driving the price of Bitcoin. Well, now they're hoping for the 4-year cycle. They're hoping for the uncanny resemblance. What do I mean by uncanny resemblance? I mean a double top with the second high being a little bit higher than the other one. One single move down and a pullback, one single move down and a pullback, followed by another move down and a pullback, another move down and a pullback, and then a slow decline to a final low, which is what a lot think and hope that we are getting into now. The fractal line of this cycle versus the last is uncanny. It's kind of amazing, actually. And it could work out, or it could be a trap. We shall see. But as I've said many times before, I think the bear market villain for this for this cycle is MicroStrategy. And when they finally go belly up, that's when you have a bottom. No more to talk about that though. So, all right, let's look. BTC leads like a lead to bear. We'll see. We'll see. All right, let's look at symbols. Let's put a bow on it. Look at the symbols you guys want to look at. Get them in if you want to. What else? Let me see. What else on my docket do I want to talk about? Oh, because I want to. I want to just take notes. Make sure to shill my favorite cryptocurrency, the only thing that I think really matters, which is Monero. And year to date, despite all the bearishness of Bitcoin, despite every other cryptocurrency, every other shitcoin being in the absolute gutter versus Bitcoin, Monero is still up 5% year to date on Bitcoin. Can't be said about anything. ETH, BTC, year to date is, let's see, let's find January. But that's just a selection bias. 1 year. Well, okay, give me another one to choose, and it'll also be better. Ethereum, Bitcoin, 18%. Solana, BTC, from the it's actually come back a little bit. Still down 10%. Every other cryptocurrency versus Bitcoin is less, which oftentimes people attribute to Bitcoin being the best. Well, it is the granddaddy of everything. But from time and time again, bear markets before, Monero outperforms everything else, including Bitcoin, because it holds its value, as opposed to Bitcoin, which is subject to the whims of Bitcoin itself. So, have you ever plotted bottom to top 100 fixer and bottom to? Yes, of course. I mean, it's that there's that. Hold on, let me find it. There's that Reddit post. That a Bitcoin cycle post. It's a green text. Hang on. The uncanny. Where is that thing? Hang on. Images. There we go. Yeah, it's this thing, which has made its rounds on social media, where, yeah, which was posted October 6, 2025. Incidentally, which no one seems to notice or pay attention to, the all-time high was, of course, back in October, or it was, excuse me, the all-time high was in October, but then the big move down, the big crash was, I think, October 10th in Bitcoin. Now, I'm blessed and cursed with a good memory about market narratives. And there was some Trump tweet that happened. It was a Friday afternoon going into the weekend. And that, for some reason, the markets being closed as they were, Bitcoin responded to and went down. And so a lot of people at the time were like, oh, Trump, not the crypto president, blah, 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 blah. I think it was probably inconsequential. The other thing that happened on October 10th was that whole BIP knots versus core thing launched. That was a whole political nuanced schism within Bitcoin about the op return value and things like that, letting people insert more arbitrary data into Bitcoin transactions in an effort to increase revenue from miners, which did pass because the miners control the network. But that is those things, no one talks about those anymore. No one talks about how those fundamental factors, mainly the schism in the Bitcoin community, led to possibly the end of the bull cycle. No one talks about that. No one talks about anything bearish in Bitcoin on Twitter, it seems, unless they're just kind of just dunking on people, which is what I try not to do. I try to be constructive as I can. It always hits for your model still king. Well, it is the king. Well, I got to say, until it's not. I think so many people are expecting it. God, the worst thing that could happen is for there to be a little bit of a rally in October. In fact, let's not call it a little bit. Let's say we have a significant rally in October going into the end of the year of Bitcoin, and then everyone piles in thinking, okay, the 4-year cycle is true. Here it comes. We're going to at least back to the all-time high, baby. And that fails to materialize. That would be that would be the most brutal thing to happen, honestly, because people, I mean, everyone has pretty much just accepted the 4-year cycle now because you can't deny it. It's undeniable. It's just been on point to the day. To the day, it's been on point. And so everyone's noticing it. So it kind of creates this sort of, I guess using Schrodinger's cat would not be good. Would be a good analogy of this. One would say it would be a self-fulfilling prophecy, but also so many people are expecting it. The worst thing that could happen, that would hurt the most people in the market would be that expectation not playing out. And I'm really going to ask the question fundamentally, what's going to push Bitcoin higher in the next cycle? I mean, it's pretty clear what did it in hindsight, but also, I mean, we can kind of know what did push it higher in the last cycle, because essentially you had the ETFs, which launched here. You, of course, had MicroStrategy to the reason people love them and still support them is because they've been buying so much Bitcoin, although they have not been able to stave off this bear cycle, which is making people pissed off at them. In fact, they've introduced more risk that could exacerbate the bear cycle. So for all their buying, for all the ETF, all the king's horses and all the king's men, speaking of kings, don't forget that Trump's election, Trump being the crypto president, perceptibly, and strategic Bitcoin reserve was the bullish sentiment that pushed it up from there. Price doesn't rise because something happened. Price rise in the expectation of something happening. And so there's all this expectation about institutional investment. There's all this expectations about Trump. There's all this buying from MicroStrategy that pushed the bull cycle higher and higher up to its zenith, and then it popped. That's because there was no more bullish things to push it any higher. So a lot of people just assume that the 4-year cycle is going to vault it back because it's a foregone conclusion, a prophecy. But what's going to be that narrative? We may not know what that narrative is. It may become apparent when price begins to go bullish, because oftentimes narrative follows price, not the other way around. But I don't know what that's going to be, and it's going to need that. It's going to need that. A lot of people in the maxi space, they just presume that Bitcoin is just inevitable. It's just by divine providence, by its fundamental scarcity, hallowed be thy name, it is going to go to 1 million. It's going to be the world reserve currency, etc. Those ideas have not died. Trust me, they're still out there. But I don't know if that's going to be the consensus of the market. See, everyone has to agree that that's true. Everyone has to believe that that's true. And the people that believe that's true are becoming an ever smaller vanishing segment. Now, of course, they're going to be greatly rewarded for their faith as they see it is right now. Right now, they don't see this as a bear market. They see it as a test of faith. But we'll see. We'll see what happens. So, all right. Let's look at, if you look at previous bottoms, there's clear accumulation. I don't know how to define accumulation because I've never really incorporated volume into my analysis, because I cut my teeth on Forex, which was prior to crypto, a decentralized financial system. Otherwise, you had lots of exchanges, lots of banks that you were trading on. So volume was never reported consistently. And the same goes with Bitcoin. We can kind of get an idea of aggregate volume based upon, using on a chart. This is the TradingView index that they've created for me, for us. But every exchange is going to have its own volume. I don't know what accumulation means. Okay. I think that it's more of a meme. I think it's a meme because people want to believe that it's being bought by people to be held, smarter people, richer people. I don't know exactly what that means. There was a lot of volume for sure back in the bear market. You can see that it's increased, but the thing you got to remember that someone told me years ago when I first got into this is there's two sides to a trade. In other words, if somebody's buying somebody's selling. So while one narrative could be people are accumulating Bitcoin at whatever level, you also have to, it also follows, it is also true, people are dumping Bitcoin at that level. It just has to be true. If people are buying it, accumulating it, people are selling that same amount, dumping it. So any way you want to put the narrative is true. People are accumulating or people are dumping. Both are true at the same time. They have to be true at the same time. It's just one sounds better for social media engagement than the other. So there's that. Let's see. All right, let's look at symbols, and then I'm going to go get ready to celebrate the birthday of America. All right, REAX. Okay, so real estate REITs. Is this a REIT? Let me talk about this before I accumulation visible in vol. But you see, understand, you can look at the volume, but you understand, like, yes, there's lots of volume, but every trade has two sides, a buyer and a seller. And so if a bunch of people are buying, if there's a lot of volume, that means also there's a lot of selling. Like, it doesn't, literally a Bitcoin, you can't create it, right? So somebody had that Bitcoin and they sold it to the accumulator. It just changed hands at a price. It really, it doesn't tell you that people one person that sold it to them had less conviction than the other. It's like, oh, the high conviction people are accumulating. Well, how do you know? How do you know who those people are? Did they call you? Did they tell you? It just means the same thing. It's just one is more popular to say if you want to paint a certain narrative. All right. Let's see. Let me look up what REAX is. I believe it's a REIT. That's what makes sense. Real Estate Investment Trust. And let's see. I'll go away. Let's see. The Real Brokerage. This is, what is this? Hoist. Profile. Real estate, real estate technology company provides title, mortgage, and wallet services and also, okay, so this isn't a REIT, it's a tech company. You got a little bullish move on there. It's pretty good. Down at $1. Yeah, this is one of those things that could be a nice little opportunity, I suppose. One of those penny stocks that could move. All right. Let's see. Okay, so I like it. It's good. Same thing with SoFi. FinTech. Is FinTech what we want to be buying? Well, it's holding on to 1591. Same thing as we talked about last week. It's good. I'd hold on to that. All right, let's go back up to Mealy, MELI. Sorry, we're MELI and Microsoft. Ooh. I say ooh because in line with what we've been saying, you've got a nice little 50% retracement level that it is holding from. That's the July 2022. It's been a little choppy around it, but it hasn't invalidated at 1600. So that's good. I like that. Make sure it goes up. That's good. Mercado, I can't do my R's in Spanish. Mercado Libre. Blah, blah, blah. All right, let's see. Microsoft has a, let's see, little less obvious. I think it did have a loosely held, it's kind of bouncing around the level. Not bearish, not bullish. I'm a pass on this, and I'll tell you why. Whenever you have something, remember I talked about something, you want something to run away from a level. You had a great opportunity for it to hold it and go in March. And I only want to buy winners. It's kind of tongue-in-cheek way of saying it, but you want something to kind of go. Okay. If Microsoft was going to go, it should have gone. And the fact that you've come back and now you're testing level again doesn't automatically mean that it's deadly, but it makes me less interested in it the second time. It should have gone. That's one of my other kind of nuanced points I don't really have a rule or a number for. Is it should have gone. Um, Good opportunities, like, like I talk about with like Amazon, uh, for that 50% level that it hit, it basically hit the 50% and went straight for that high to test it and then beyond. That's what you want to see. You don't want to see it come right here and then turn back around. That's not good. Does that make sense? So not big on Microsoft based on its price action right now. KKR. KKR, I believe if we look at it, it's kind of another example of that where it should have gone and it's kind of faltering. If we take a look at, if we start the trend from the October low back in the October bear cycle, this is a example of where, yeah, you just happen to give it to me, and it's another example of what I mean. So not only did it really not hold that 50% level, but it came up, gave you a little bit of gains, but it stalled out and it didn't get up to retest that high. You want to buy winners, and that failure up there is a warning sign. And of course, now it comes back up, makes another attempt, and now it's come back to hold that level. This is an absolute no for me, because this has not only failed to get up there to that high, but it's also come back up to retest that 50% as a resistance. So now instead of being a support in your favor, it's come up and told you, nope, that's my resistance. And now you're just kind of in open space. So this is KKR is a flat out no for me. This is hashtag not financial advice, but this is an example of something where if I had bought it at that level 106, I would be getting out right now. Because this is one of those things that can be really dangerous if you hope that it recovers, because you're already below the level in the valued risk. All right, let's see here. Anything else? Volume profile shows where high trading occurred in particular price range, which in fact shows big accumulation. And that is, yes, we can say that is a big What I'm trying to say is that's where a lot of trading happened. There was there's a lot of conviction changing. That's another way to say. Because again, lots of people were buying at the same time that lots of people were selling. And yes, that could be where a lot of people began their positions. And the people that are in the position are going to define the personality of that instrument, because they're the ones that are most financially and emotionally invested into it. So yes, that is another reason why volume profile works. And you can call it accumulation. And then of course you can justify that by saying, okay, the people that are in and holding it, that is the level from whence they have begun their positions, or at least most people have. So yes, you can use it in that context. But where I push back on is this automatic assumed narrative that because there was a lot of volume at any particular point, that means that it changed fundamentally the sentiment. The people changed. Let's put it that way. Some people accumulated, some people dumped. And where social media goes with that typically is they say, oh, well, the institutions, the hodlers, the long-term holders, they accumulated. I push back because I think it paints it more narrates, it more gives a nice story to someone's preconceived notions rather than looking at things objectively. And I think a loss of objectivity is what costs people the most, because they end up bag holding things that are not working out. You want to buy winners and you don't want to accept losses. And I think if a lot of people, my pushback would be, don't buy something because somebody on social media told you that people smarter or with more money than you have not bought it. That's just a narrative. In fact, billionaires lose a bunch of money all the time. Wealth changes hands. I don't believe that anyone can be smarter than you, me, anyone. Because even though they may be a billionaire, even though they may be an institution, they're still made up of humans. And humans are subject to the same mistakes as anyone else. That's why anyone can make money trading, investing, is because we're all human and we're all trading against other humans. And you just have to be careful not to get drawn into the manipulation of other humans. Because trust me, manipulating people, especially to buy your financial products by telling them that it's zero risk and you're going to get rich off of them, that's a lot easier than actually delivering a wealth generating product for sure. And you know who I'm talking about. All right, guys. Well, that seems to be all the symbols. Hope you guys took something from it, and we'll talk more about instructional stuff going forward. Hope you guys have a great weekend. Happy America Day. We'll see you next week. Bye bye.